Welcome back to Stock Kong Invest and Analysis, where we look at the market and break down the opportunities.
Like and subscribe!
AMD record quarter, but stock plummets. A strong buy opportunity? This article was written by Agar Capital. Summary. Pause. Advanced Micro Devices Inc. delivered record Q4 2025 results, beating revenue and EPS estimates, yet shares dropped 8% post-earnings due to sentiment and guidance concerns. Data center revenue surged 39% year-over-year to $5.38 billion, now over half of AMD's total, driving operating leverage and margin expansion despite temporary China-related headwinds. Gross margin volatility stemmed from U.S. export restrictions impacting MI308 GPU sales to China. Q1 2026 guidance implies 55% margin and sequential revenue decline, unsettling investors. I maintain a buy rating for AMD stock, targeting $291 to $304 based on 30 to 40% EPS growth and normalized multiples, viewing the sell-off as a profit-taking opportunity rather than a fundamental shift. Thesis: a stock that has shattered both top-line revenue and bottom-line earnings estimates, and is subsequently punished by an 8% drop in the aftermarket, is illogical. However, it's true, it's the reality, and it may have been one you've seen before. To put it bluntly, it reminds me quite a bit of NVIDIA's NVDA performance after the company's November 2025 earnings report. A great quarterly report followed by a sell-off the very next day. That's essentially what occurred with Advanced Micro Devices Inc., AMD, after the company released its fourth quarter earnings report in 2025. AMD exceeded analysts' already high expectations for the company's quarterly results, EPS of $1.53 compared to the consensus estimate of $1.32, revenue of $10.27 billion as opposed to the estimated $9.67 billion. Additionally, AMD increased its guidance for the subsequent quarter and posted a record. Therefore, what could be causing the stock price to fall 8% in the aftermarket? I believe the most likely explanation is investor and analyst sentiment. Many are viewing AMD through a microscope in hopes that the company will do something wrong, allowing them to immediately press sell on their computer screens and claim some of the profits they have garnered thus far. I'm a long-term investor in AMD, and I continue to believe in the company, regardless of the market's response to the quarterly results. I was calm, and I actually did not intend to write this article. But the fact that the stock price dropped following the quarterly results forced me to log on to Bloomberg and begin searching for the error, the problem. Simply stated, blame sky-high expectations and a couple of discordant notes in the company's guidance, which precipitated the classic sell the news. I'll provide additional insight into each of these points in today's article. Results at a glance. I anticipated that AMD would report some impressive numbers when it reported its fourth quarter, Q4 2025. In fact, if we look at the numbers individually, there is little to criticize. It was another record-setting quarter in many different categories: double-digit growth in revenue, good operating leverage, and growing margins. What we are looking at here are numbers significantly better than estimates for both revenue and EPS. Guidance for Q1 2026 also shows the trend of growing numbers, and the midpoint of the range of $9.8 billion suggests 32% year-over-year growth and is higher than estimates from analysts. I do not believe that there is evidence of a decline or struggle for the company, and the market's immediate reaction to the numbers has left me somewhat concerned, as I am a shareholder of the company. Those who sold didn't do so because of the quarterly results, but because they needed to cash in and take advantage of the moment of weakness. I'm using a euphemism, obviously, to take home some profit. I've been saying it repeatedly this year. Be very careful, especially with stocks with high valuations. This will be the year in which investors will perform autopsies on stocks, and every small misstep will be severely punished. The market today doesn't reward growth rates, but rather linearity and quarter-by-quarter visibility. If there is any irregularity in the revenue mix, margins, or revenue timeline, it will be immediately punished, particularly for companies that have had high historical growth rates. Before getting into why investors were concerned about the numbers, it would be useful to understand what drove the success during the last quarter, as that is where the thesis needs to be developed, not in how the stock reacted in the short term. The good. The best way to get a grasp of what is going on with those numbers is to look beyond the overall results and start digging into the details by segmenting the businesses. The fourth quarter saw $5.38 billion in revenues for the data center segment, a whopping 39% increase over last year's fourth quarter. To put this number into perspective, while it may not be extraordinary, it's really where the money is today for the company. The segment itself has two main components: EPYC processors for server applications and Instinct GPUs for artificial intelligence. Hyperscalers and other large cloud-based data centers are buying massive amounts of hardware designed specifically to handle the increasing demand for AI infrastructure. So, as you'll see later, demand is coming from all directions. The real point to take away here is that we can't talk about low margin for data center. Look at the segment table below. Data center operating profit is increasing more rapidly than data center revenue. That is completely unbelievable to me. Every single extra dollar that AMD generates in this segment will weigh significantly heavier on their bottom line than it did before. AMD currently generates over half its revenue from this section, client. Now let's look at client, PCs and laptops. AMD has done something the marketplace usually underestimates. The client and gaming segment revenues were $3.94 billion in Q4, and PC revenues alone reached a record high of $3.1 billion in Q4, an increase of 34% compared to last year. This is a new all-time record for AMD in PC segment revenues. Most people believe that after the PC market crashed from 2022 through 2023, this division would have flat or declining revenue. Not so for AMD. AMD is profiting from two very real factors: a gradual improvement in demand and a significantly more premium product mix, embedded. I will admit that embedded is the least likely to grow. That being said, there are a couple of points worth noting. Revenue was approximately $950 million, which is relatively unchanged year over year. Inventory adjustments by industrial customers continue to be a major issue for this business. These changes occur cyclically, as they do across most industries. While embedded is not a significant contributor to AMD's current growth, it is also not negatively impacting the company's overall financial performance. Another thing that I did find interesting was cash flow generation. For 2025, AMD achieved record amounts of free cash flow due to a combination of greater earnings and better capital discipline. With additional cash, AMD can increase the ability to fund future research and development projects, support its AI roadmap, and potentially support the stock price through share repurchases when needed. The bad. It's equally true that not everything went smoothly. To be exact, there were several factors that made selling a legitimate option for investors. Firstly, the gross margin hump shown in the gross margin chart shows a drop in margins in 2025 after many years of growth, with a rebound afterwards. This hump is not simply a coincidence. Rather, the hump in gross margins directly relates to U.S. trade restrictions imposed on exporting to China, and especially on the MI308 AI GPUs. Specifically, AMD wrote off some of the MI308 inventory intended for China in 2025 due to its loss of free export status. As such, margins were negatively impacted. However, in Q4, AMD partially released those inventories and therefore saw an increase in temporary gross margin to 57%. Again, the problem is that the market knows that this will never happen again. To the contrary, AMD expects a margin of approximately 55% for Q1 2026, significantly below the peak seen at the end of the quarter, and notably far from the margins of approximately 70% seen by NVIDIA. The first major obstacle for the company will be the ongoing issues surrounding China and the MI308 GPU. In Q4, AMD benefited by about $360 million as a result of the increased inventory levels of MI308s into China. However, in Q1, the company estimates that it will generate only about $100 million in MI308 sales to China, indicating that the restrictions are still in place and that the contribution of the Chinese market to AMD's AI business is limited. The market knows this. However, many also fear that due to this restriction, the potential slowdown in the AI ramp, especially when compared to Nvidia, may create temporary headwinds for the company. A second area that has caused some concern is the sequential guidance provided by the company. While year-over-year growth was very strong, plus 32% year-over-year in Q1, the sequential guidance indicates a decline of about 8% compared to Q4. This type of guidance is typical of the semiconductor industry. The problem now is that the market does not think in terms of seasonality anymore, but instead in terms of the AI story. As such, many investors were expecting that the growth would be almost straight line from one quarter to the next. When that linearity is broken even temporarily, the investor response is often disappointment. Then there's the issue of margins, which should be looked at in conjunction with the 2 points previously stated. Gross margin is still structurally higher than previously, but in the near term, there is no evidence of acceleration of gross margin, as many had hoped. And that's the final nail in the coffin. A negative contribution came from the gaming segment, particularly sequential. The gaming segment generated revenue of $843 million for the fourth quarter, which was significantly higher year-over-year on a comparative basis. However, it declined dramatically from the third quarter. This is largely a seasonal phenomenon. Console chips are produced primarily during the summer months ahead of the holidays and slow down at the end of the year. 33 to 35x, even though the stock is currently near its all-time highs. This is the exact type of development that I like to see in a growth stock as it moves into maturity. Right now, following the drop in price post-earnings, AMD is selling at approximately 33 times future earnings and roughly 20 to 25 times prospective EV/EBITDA. It's not a discounted stock, but it's not expensive either when compared to expected earnings growth, which remains in the range of 30 to 40% annually. AMD ended 2025 with non-GAAP earnings per share of approximately $4.2. With the consensus on the strong increasing influence of AI in data centers, a reasonable estimate for future EPS to be in the $8 range over the next 12 to 18 months represents my base case. A conservative multiple of 36x, in line with the stock's historical growth phases, produces a target price of approximately $291. With a slightly better than expected execution, as represented by a little more AI, a little more operating leverage, and slightly higher margins, the EPS should be in the neighborhood of $8.3 to $8.5, and the multiple of 37x will send the stock up to $300 to $305. Thus, my second target price would be $304. The market is selling today because of fear, not value, to take profit. For me, AMD isn't cheap in an absolute sense, but it's much more justified than it was in the past. And that's why, after this emotional market reaction, I remain a firm buy. Conclusion. We've entered a market phase I call show me the money, where companies must now demonstrate and avoid making mistakes. Those who make mistakes pay. They pay worse than in any other period in the past. People sell out of nervousness, but also to take profits. The company has delivered good results, but that hasn't been enough. Of course, some setbacks can change the market's outlook. It has happened to others, and it will occur again. Many examples will surface in 2026. AMD wasn't penalized due to poor revenue or profit performance. Far from it. But rather because of non-linear growth and the fact that certain unique events obscured the story. To me, none of those things change the fundamental trajectory I believe the company will follow, which in my view will follow additional data centers, additional AI, higher margins, and more cash. The issues with China and the cautious Q1 guide are just noise and will resolve themselves as they have done in the past. At today's prices, the stock is more attractive at today's price level than it was prior to the quarterly release. This article.
Hey viewers, like and subscribe to our channel. We'll keep bringing you more insightful stock analysis. It's going to be wild.